That'll be good. But I bet you at least one more topic comes out of this.
Yeah.
Are you ready to go?
Yep, I'm recording.
Welcome everyone to POV Crypto, the only podcast that both Bitcoiners and Ethereans listen to. I'm David Hoffman here with my buddy Christian. Christian, how you doing?
Dude, it is hot, smoky, and gross in California. It seems like the entire West Coast is on fire.
Yep. Yeah, it's smoky in Seattle as well. We're getting smoke all the way up from Oregon, or all the way down from Oregon, up from Oregon. And then my friend in San Diego is posting on her Instagram about how it's smoky down there too. So it's the whole entire West Coast, dude. The whole entire West Coast is on fire right now.
It sucks. So, I mean, I feel like neither of us are scientists. Neither of us, I don't know, like really should have a strong opinion on climate change. But like, what's your take on climate change? It seems as though things are getting hotter. Temperatures are more extreme.
Yeah, I grew up, so I currently live in the same neighborhood that I grew up in, same city. And so when I was a kid, before college, there were fires. Fires weren't a thing, and now they're a thing every single summer here in Washington, right? And then fires have always been a thing in California, but now they just seem to
I don't
be
remember
getting
it like
worse and
this.
worse, right?
Growing up
Yeah.
in LA was not like every single year.
Yeah, and like so maybe it's climate change. Maybe everything's drier. Maybe we're just fucking with the forests, and the forests are different now and more prone to fires. Maybe like farming is a thing. Maybe that's related. But I mean, let's go with Occam's razor and call it climate change.
Yeah, I mean, we shouldn't get too hung up on this. I'm sure there's some much more impassioned
Yeah.
deniers and believers listening to this pod who just don't give a shit about what we think. So outside of the
Either
world
way, the
burning,
West Coast is on fire.
yeah, outside of the West Coast burning, so are the crypto markets. I guess they're in the green right now. It's Tuesday morning, the 8th, or Tuesday afternoon, but they did have quite the tumble over the course of the weekend.
I love the second day after the crash because the second day always is like you check out your Blockfolio and like everything is green because everything just like dips so hard and then it finally bounced and that was yesterday, right? Like yesterday was the day like your Blockfolio was super green because everything just got burned so bad and it finally bounced. This bounce could have been better. But so like there was a number of things that all happened at once. Like for some reason, we decided to become super correlated with equities, with the traditional stock market. That kind of surprised me. I don't know why we would just all of a sudden now become correlated again. So that's something to take note of. Apparently, a bunch of miners decided to start selling for some reason. I mean, that happens. My miners sell, but they decided to sell recently, and so that pushed down the price.
So how do you know that they're miners?
This is just a rumor. I should be researching it more. Like I heard an article, and through my circles, I hear people like saying like, yeah, miners are deciding to dump right now for some reason. I don't know how they deduce that, but that's just what I heard. I mean, I take it you haven't. And then there's also SUSHI for the Ethereum markets, which deflated a lot of Ether gains.
Yeah, so I would say that there's like three things that kind of I'm observing right now. First, you're right. There is a strong correlation with stocks. I really think it has to do with when there are big moves in stocks. Like the same people that are playing in the stock markets are now playing, at least in the large cap crypto markets. They're playing with everything that you can get on Coinbase, as far as I'm concerned. Like, so if people are selling there, then they have to sell their winners, and some of their winners are the crypto guys. So it makes a lot of sense that there is a correlation there, because I think that a lot of the same individuals that are buying and selling in stocks are also buying and selling in large cap cryptos. Beyond that, like if you think about Bitcoin, I don't know, like Bitcoin and Ethereum, they both mooned, at a much higher price in 2017. But if you think about, like, they weren't at those prices for very long. They didn't really earn those prices. Yeah. So like, if you think about like, what is there a price that Bitcoin has held for at least 30 days or Ethereum has held for at least 30 days? Like, what's the top of that? Maybe that's probably more like a real top. And for all intensive purposes, 12K is that. Like,
Right.
really everything above
Right.
12K have been like very fleeting, and it's been like a 24-hour 2-week kind of thing, where the price is
Right.
just moving ridiculously and that people are FOMOing in. So I
Right.
mean, with that being said, like, macro, people are selling, there's uncertainty with future stimulus in the US, a lot of
Mm-hmm.
political tension, a lot of other things going on. Bitcoin is pretty much at its top, and then on top of that, just massive froth in the DeFi space, massive overbought shitcoins,
Mm-hmm.
massive
Leverage
FOMO.
shitcoins. Yeah.
Yeah, so like all of those things, I think that makes for a pretty logical place for a local top. Like,
Yeah.
I wasn't super surprised. I think I did call the top perfectly. I said this would be a good time to sell your shitcoins for some Bitcoin. I think it was on September 1st, and that was the local top, like almost
Was it?
within hours. So I got pretty lucky. Can't say that it was expertise at all. I just like my gut said, yo, this is getting way too crazy, and it just worked out.
Gut is as good of an expertise as actual expertise, in my opinion. Like markets are inherently unpredictable. Therefore, your gut is as good as anything, right? And like we have to remind ourselves, and this was true coming out of 2016. If you look at the 2016 chart, like when we transition from bear market to bull market, like the way that works is that a lot of people have to get bought out, right? A lot of people that like bought Ether at $80, bought Bitcoin at $3,000, like, all right, well, Bitcoin's now 12K, Ether is now like 400, now it's 330. Like they made 4x, right? And so like they made a lot of money. And like the rule is if someone makes a lot of money really quickly, they're selling. Like that's the rule. Like if you make a lot of money really fast, you sell.
Yeah.
Like good luck convincing people to not do that. And so like when Ether goes from like 260 to 490 almost, and then DeFi tokens do like 10x that, like good luck convincing these people not to sell, right? And so the 2016 era before the 2017 bull market, and now what this kind of seems like that is where we are now as well. It's like we still have like a lot of sellers to get through because of what you said. Like Bitcoin's top was 20K, but like it was there for it was at 20K for a couple hours, and then it was above 17K for like 3 days, and then it was above like 12K for like 2 weeks or something. Like it feels like a lot longer in my memory, but that's because time is weird, and like things have not, like Ether is at, like I would say Bitcoin's 12K, like 300 range. It's like Ether's
Yeah,
12K. And
I'd
so
be
like
curious to look into
there's
both, like, and see if like what exactly is like. Let's just call it a month time period. Like it had to have held the price for at least 30 days
Mhm.
consecutively. I would be interested to see what the all-time high is based on that constraint for both. That would probably be a pretty good metric
Yeah.
to use moving
I
forward.
I bet you it's 330 and 12K. I bet you it's really close to those things.
Okay, well, let's take a look and report back.
Yeah.
So yeah, David, let's do a little bit of like postmortem on the local top on DeFi. As you know, as someone from the outside looking in, DeFi is not dead. I think that a lot of these tokens are going to go up a lot, and a lot of these tokens are going to be a big part of the next mania. But
Mm-hmm.
obviously, there was a lot of froth, and this is just, in my opinion, a precursor, just a preview of the mania that is to come. So I'm curious, like you being from the inside out, what's your postmortem on the first, this first iteration?
Yeah, yeah. The first tumble in the grander scheme of things. Yeah. So all right. So here's what happened. There was a farm there, and there are many farms, and there's this one farm called Sushi Swap, and the guy that created it was anonymous, which is like both a good thing and a bad thing. Like
I
a
like
good
it.
thing is
It's good.
yeah, like
There's a
a
couple
good thing is
Anon
like
projects
Satoshi.
now, DeFi.
Right, like full like Anon founders allow things to become like decentralized and community operated sooner, as like take Satoshi as a note. However, if you have a DeFi founder who also, like Sushi Swap did, implemented a 10% dev fund, so that means like if you mine 10 or if you mine 9, 10 sushi tokens, one sushi token gets added to the dev fund. and that's controlled by the one anonymous founder, right? So like, if you are optimistic, it's good, and if you're pessimistic, it's bad, because like this guy is taxing everyone 10% of their labor and 10% of their capital.
Yeah, it's bad overall.
Yeah, and so that's sketch. And yeah, so like, Bitcoiners, we know this, think more adversarially, and Ethereum people like experiments and generally trust other people, and that turned out to bite the Ethereans who believed in SushiSwap in the butt. But before we go on, I do want to make some important notes, is that the only people that lost money are the people that market bought the Sushi token on Uniswap, which is generally unadvisable if you are trying to take a risk-adverse farming strategy. You don't buy the tokens, you farm them. That's why they're called farms. You don't buy them. You're not the produce buyer, you're the produce producer. So they didn't lose money. If you only farmed, you didn't lose any money. And then if you added liquidity to the Sushi Uniswap pool, which was incentivized because that's part of the way that you farm, then you also did lose money.
But Sushi is also at all-time highs right now, so I think no one lost money.
Is it really?
Yeah, it's like over $10 now.
Holy shit. Okay. Yeah,
so I think it is a bull market. It is a bull market.
Wow,
for sure.
I did not know that in the fucking slightest. That is crazy.
So it's funny as you're going through this, but I had to throw in the correction that
Wow, I did not know that.
If it has been decentralized, it was decentralized by FTX and Sam, who like now divvied up the multi-sig
into. About that guy?
Well, I know a lot about Sam, but I don't know very much about this other than Sam is very advantageous.
What do you mean by advantageous?
So, I mean, I would say that FTX.com is the best exchange right now in terms of coming up with really unique products and being really quick to ship and trying to be crypto native. Like, as far as I can tell, number one with the bullet, they took Binance's playbook and they did it better and faster and more recklessly than Binance.
So that's what I've heard too, is they're Binance 2.0.
Yeah, I mean, totally. So, I mean, I've interviewed him twice. I think he's a genius. But he's been really quick to jump on this, and he's using this as like, he's trying to steal this momentum and take it to his own private or, BC blockchain, which is Serum, and Solana. So, I mean, he has an initiative. He is playing in the DeFi space. He's a whale. He's shipping products. He's listing every DeFi token on FTX. He's just trying to do whatever he can to keep FTX.com as relevant as possible.
Yeah, so there are some conspiracies about the relationship between the Sushi founder and Sam. Generally, in my circles, people don't trust him. And it's largely because they're taking it off to Serum, right? Which is also a terrible name for an Ethereum killer. Because as far as Ethereum people are concerned, like Serum is just one of the many Ethereum killers.
Yeah, I mean, so my thoughts around Ethereum have changed a lot, and I would say what Ethereum is today, Ethereum's biggest competitors are actually centralized exchanges directly. And so I would say FTX is one of Ethereum's biggest competitors. So I think Ethereum and DeFi are directly competing with every bucket shop. Like, that is what we're seeing. And gas fees are the price to transact on the coordinated decentralized cloud infrastructure. So I think that there's issues with Ethereum. I think that there's differences between Ethereum and Bitcoin. But as far as what DeFi is competing against, it's definitely, shitcoin exchanges, and it's doing a really freaking good job of it. So it's interesting to see, and ETH people should be very skeptical of Sam. Sam's trying to eat your lunch, yo.
Yeah. And like, I feel like some part of the Sushi community has like rallied behind it, because like at some point as a community member, you're incentivized for number to go up. And so if Sam is making number go up, then so be it. Yeah, it is interesting. Like, in some way where the Sushi founder like market dumped all his sushi and bailed from the project, it's kind of like if Satoshi had pulled a Charlie Lee very early and said like, all right, well, I made it, so now I'm out. So like formalizing the fact that it doesn't matter that there was a founder at one point in time, because the founder is relevant now. So in the name of like decentralization, I guess that's a little bit bullish, because like you always want people that, you know, aren't aligned with the community members to sell to other people that are aligned with community members. So like that's interesting. There is even further conspiracies where like the SUSHI coordinator and Sam coordinated between themselves as like this massive big like psyops opportunity. There's even more conspiracy theories that like Sam is the SUSHI founder. Because conspiracy theories all abound. I think to some degree this has already happened. People are going to forget about it and just move on and just resume farming, because there's still plenty of farms out there. There's still plenty of yield, right? So now that there's a lot of leverage out of the system, we can farm more safely, and at some point, leverage will just fall right back into the system.
Yeah, no, I don't think that the cycles are ending. Definitely not now. Again, this is just a glimpse into what we can see or what is going to happen in the future, and most likely on a orders of magnitude greater scale. So,
Agreed.
So something that you
now.
Yeah, I mean, so I want to bring up something. So like I saw a post from Alex Gus. I think he's like
Gusman.
Yeah, Gusman at .eth or whatever. But he like posted a thing of like the guy sweating, trying to choose which like between two buttons, and it was like claiming to be a profit maximalist, and then like being a profit maximalist versus virtue signaling on Twitter. And I was like, okay, this is interesting. And then I kind of boiled it down to be like profit maximalist is short-term thinker in the Ethereum space, and a virtue signaler, or someone who is like more of like a ETH first, like kind of F the short-term profits, F the shit coins, F bad actors. Like that's more of a long-term thinker in the ETH space. What do you think of that take?
Yeah, so you're saying like virtue signaling is like signaling for the benefit of Ethereum, right? And like to that is somewhat aligned with being like an ETH bag holder, because if you are a bag holder of ETH and you're absconding from like the profits of DeFi tokens, you're signaling that like you're committed to Ethereum, not necessarily the transient farm that just cropped up a few moments ago. Is that what you're saying?
Sure. I mean, and I would say, I'm sure that a lot of ETH people would say, like, we don't actually sell our ETH. We leverage it and,
Right.
take out a loan and then, use that to get
Mm-hmm.
yield, blah, blah, blah. I'm not saying like that. Like he was saying, like someone brought up an example of like, SUSHI going to Solana, and that, like, that's bad for Ethereum, and like ETH people getting taken advantage of by, scammers who are, trying to take advantage of Ethereum people's goodwill. And he's saying, well, profit maximalists shouldn't care. Like profit maximalists just here to make the money and take advantage of the opportunity and, move on and either get their ETH or BTC or USD. Like, I don't know. I feel like, okay, so that person is kind of a parasite to the ETH space. I would say that they're a short-term thinker in the ETH space versus someone who is like, maybe like, hey, I don't like farming on projects that have bad will towards the community. Like I'm only going to participate in goodwill projects, or I'm gonna, like, on Twitter I'm gonna say, hey, F this, instead of just trading it or whatever.
Right. So like to some degree, profit maximalists, like this space at large, Bitcoin included, commits to profit maximalists, right? Because that's how hype cycles happen. If like the SUSHI farm moves off to Solana and then a bunch of people move on to Solana to farm SUSHI, like I can't think of a more strong signal that this bear market or this bull market is fucking for real, right? Because people don't give a fuck about anything and they're here for the money. And that's like the average person. Like average person doesn't give a shit about Bitcoin. Average person doesn't give a shit about Ethereum. But if they're coming in to like be a profit maximalist, that was probably me in 2017. I mean, I'm kind of an idealistic guy, but to some degree,
you were a profit maximalist for sure. But
yeah,
you were idealistic too.
I was pretty idealistic. Like all the tokens I bought, I had like a narrative for. But like that's how this thing works. Sorry.
I remember your crazy stories.
Yeah. Spank chain. But this is just a commitment to how the space works. Like there's the believers that stick around through the bear market that build things for the profit maximalists to come in and take advantage of. And then some of the profit maximalists get converted into believers, and then those guys cycle through. So, to some degree, And there's also nuance there. You can be a profit maximalist for some farm and then a believer in another farm. Like, for example, Wifey has done a fantastic job turning people into believers, right? And I would say the same is true for Yams as well, and also to some degree Based, but I would still say the jury's out on that one. But there are also plenty of farms like Swerve maybe is more of a profit maximalist, like Sushi definitely a profit maximalist, because unlike all the other farms out there, Sushi was a vampire attack on Uniswap, right? So it wasn't value additive, it was value theft, right? It was taking back Uniswap and putting it over to Sushi. So it wasn't generative. Whereas Yearn and Wifey and Yams are actually generative of value. And so like, there's different, like, just like in the way there's values and ethos baked into Bitcoin and Ethereum, there's also values and ethos like baked in, and culture baked into these individual farms that are largely defined on how the protocol works, right? Like, and in hindsight, the 10% dev fund for Sushi is baking in values that we kind of overlooked as a community and just like, oh, dev fund, sure, like dev funds are important. We like to pay our developers, I guess. And then it turns out to be like, no, the dev fund actually meant a founder's reward, according to the Sushi founder.
Yeah, so a dev fund always means one person or one group has like a seniorage over everyone else. So pretty much always bad. Like, I guess like I'm sure there's some formats that are not supposed to be that decentralized or whatever, and you're just trying to distribute amongst a small group. Okay, that could make sense. But in terms of if you're trying to massively decentralize, like that right there is just a critical bug, in my opinion. 100%
Yeah,
of the
I would
time.
agree. I would agree if it's seniorage of the token in question, which it was. However, Yearn has 9 people that it's paying for from the treasury, not from the minting of new Wifey tokens, because there's a very strong growing social contract that there will only ever be 30,000 Wifey tokens ever. And therefore, these people are being paid for from the revenue generated by the protocol, right? So there is like a quote unquote dev fund, I guess you would call it that. It's really more protocol salaries. But certain people are being paid out of the protocol, but it's the revenue of the protocol, not the equity of the protocol.
Yeah, well, I think that you're making clear distinctions there. I would push back and say that the Yearn token and community is less than a month old, so like any social contract, like
No, it's 10 weeks old, bro.
okay, well, whatever. That's still not that long. So
Well,
it's
a couple orders of magnitude larger than what you just said.
okay. It's 10 weeks old, and that's still a very young project, and you have to just take all of these things with a grain of salt.
Yeah, I would agree. However, a lot of early culture is baked in. A lot of culture is baked in early, right? And I believe that this 30,000 hard cap limit is here to stay. For some reason, the community really, really likes it. So
I have a question for you. It's like
sure.
over 29,000 tokens have already been minted. So like the distribution of the Wi-Fi tokens is like almost complete, right? Like there's very few
No, I
tokens
think,
left to be
did you go
distributed.
and see that on CoinGecko?
I mean, yeah, I was just looking at like tell me more about the
There's
distribution strategy.
all 30,000 are done, and it was done a long time ago. It was done like
Okay.
I think in the first 2 weeks. 30,000 have been out for a while.
So there's no more Wi-Fi farming.
There's no farm. Yeah, the farm hasn't existed for like 7 or 8
So
weeks.
okay, so what do you think of that? Because like I mean, a lot of Ethereum. I mean, I don't think Ethereum people care about distribution that much, but like some of them do say like, oh, well, like Bitcoin's distribution is obviously unfair because so many early miners got so many tokens, but it took 4 years for 50% of Bitcoins, for the first 50% of Bitcoins to be mined, and that was largely during like a very unknown period of time, like Wifey being completely mined in 2 weeks. Like,
Yeah.
how do you feel like that affects the distribution and like all that stuff?
Yeah, not only was it like completely mined within 2 weeks, but like it also mooned really, really fast, right? Like it's 10 weeks old and it's already over $1 billion, probably not now, but it got to $1 billion market cap in under 10 weeks, right? And so like not only was it mined fast, but also moon fast, which like cuts off retail, right? And so like if you weren't in there to begin with, like you're already priced out to some degree. Like you're not a lot of the upside has already happened. So yeah, that sucks for distribution. But it's not a global currency, right? It is equity in a protocol. It's governance over a protocol. And so like large, wide entropy and distribution for Wi-Fi doesn't actually negatively impact the protocol all that much, right? Like it's still sufficiently distributed to the point where like governments aren't going to be able to do anything, and it's distributed enough to where governance is anti-fragile probably, and but it's also centralized enough where governance can be really nimble. And so I actually kind of credit that like Wi-Fi and the Yearn protocol are credited with like being the fastest shipping project to date in the crypto space ever. Like the amount of shipping that it has done is absolutely insane. And not only shipping, but like successful shipping, like shipping out like A+ editions that people use like on day one. Like they shipped out the YETH integration, and there's already 300,000 ETH in there, which is insane. And so, I credit that more concentration of Wi-Fi tokens as to perhaps a reason why this protocol can be more nimble.
Yeah, I'm still trying to understand like how censorship resistant these things need to be, therefore how decentralized they need to be, and then try to evaluate, do they meet the right level of censorship resistance? Like, so like that's kind of how I'm going about thinking about it. It seems as though a lot of the ones that I've looked at so far, and I have to say I haven't done that much research, just like looking at the most popular ones that, are intriguing me. Like I'm obviously looking at quality, but almost all of these have been like 99% farmed completely, kind of out the gate. I'm just kind of curious, like what does that mean for the distribution overall? And again, like Ethereum people have criticized Bitcoin's distribution. Bitcoiners have obviously criticized Ethereum's distribution. These are all like way more quickly mined than any of those projects.
Right. And again, it does being a global non-sovereign currency requires has a different optimum level of distribution than like a farmed equity token over a protocol with cash flows and a treasury, right? So that's important to keep in mind. One thing that does concern me is that like this whole yield farming thing is like supposed to be like the new and improved ICO basically, right? Like instead of having an investment contract, instead of selling one asset for another, you are instead just locking up your assets as an opportunity cost to signal your commitment to a protocol, and then you get the tokens, right? And you farm those tokens. And then a new farm crops up, and then you migrate your capital over to the new farm, including the new tokens that you just farmed. And then a new farm hops up, and then you move your capital that way, and then including the new tokens that you just farmed. And so we can talk about the distribution, the lack of distribution on these like pop-up quickly mined farms. What really bothers me is that like the distribution of Wi-Fi and then Yams and Based and Swerve and Sushi are largely all the same like core group of people who are just moving they're just DeFi whales. And that's why Ethereum prices are so fucking high, is because like the same core group of people, call it like, I don't know, 1,000, 10,000 individuals are making like, big moves on Ethereum, farming all the tokens. And so like, sure, we have lesser distribution of these farm tokens than Ether, which I still think is okay. But what does bother me is that the distribution of all these farm tokens are all the same distribution. They're just going to the same people, and it's all the whales.
Yeah, and
but I also don't think that's all that different
happy
in real life. Whales are happy. Yeah, whales are happy with Ethereum right now.
So, I mean, I do think that what we're seeing in the yield farming space is inflation. And Sam said that on the Bitcoin Magazine panel that he was on a month ago, where we did talk about DeFi with a bunch of Bitcoin maximalists, which was interesting experience. You can check it out on YouTube, but
I think I will.
yeah, you should. We actually made a clip, David, so it'll be much easier. But Sam did make the observations like a lot of this is inflation. Like, obviously, like there's the hard money side of crypto, and then there's obviously the inflation side of crypto. ICOs, DeFi is a very interesting form of like way to distribute route around regulation. It's awesome that Jake was a big part of kind of coming up with it with comp. And I mean, I think it kind of cements him as, and I don't know how much he had to do with it, how much the rest of the team did, but kind of cements him as like someone who is probably going to be a legal innovator and like lead in setting precedent, which I think is bullish. So I don't know, like it's just interesting to see how open source just eats the world. Like whether it's Bitcoin, whether it's token distribution incentives, like this is like whatever yield farming is, it's 10 times better than airdrops and ICOs. That's for sure.
Right. Yes.
In terms of
agreed with that.
Although I feel like what we're seeing right now is still very far from optimal.
Yeah, and to some degree, that's just like written into the fabric of the universe, right? Like rich people have optionality and poor people don't, and that's written into. It's not written into Ethereum. That's just written into the world.
Yeah,
I would rule. Say, yeah, I would say that you're saying that these farm tokens are inflation is like a pretty blunt take. Because I don't think that you consider like Bitcoin Gold or Bitcoin Diamond as inflation to Bitcoin, right?
Well, no, but the fact that they are tokens that are insta-printed and then have some sort of tradable value, I think that is inflation.
So then Bitcoin Gold and Bitcoin Diamond are also inflation.
Well, they are not like inflationary to Bitcoin, but it is inflation in the world.
Inflation.
It's literally, it's like, money printing.
Right.
Like Bitcoin did have great inflation in the world. Yeah.
Right. Yeah. And that's actually partly why I'm always perpetually bullish on Ethereum, is because like Ethereum is a place to just host a bunch of fucking market caps all over the place and then trade against Ether.
Bitcoin does benefit from inflation, but Ether gets much more benefit, like much more direct benefit from inflation.
Right. Ether.
But there's also a downside to inflation. We also know about the downsides to inflation too. Like inflation creates big bubbles, and those bubbles unwind.
Right. Yes. Yeah. But then so far in the crypto space, they never unwind all the way. They always have a new floor. Yeah. That's take though. It's like Ether benefits is like the Cantillon insider of all of like the fucking DeFi tokens that spin up $1 billion market caps in 2 weeks on its platform.
Well, I mean, Ethereum, but I don't know. Like we have yet to see if Ether actually 100% captures it. I know there's going to be future things to change that, but we'll see.
Well, I mean, the sushi swap guy didn't he traded his sushi for Ether. He didn't trade it for DAI or USDC or Bitcoin. Traded it for Ether.
Yep. We'll see how that continues to escalate.
Yeah.
Could be a bad trader. But
there's
the sushi trader's decent.
Yeah. The trader. How do you like that? The Ether locked in DeFi all-time high. Not even a little bit. Not even a little bit. Creeping up the ranks.
I mean, dude, I think most Bitcoin and Ethereum stats are at all-time high.
Yeah.
Like really interesting stats are like the amount of wallets with this amount of Ethereum or this amount of Bitcoin. I'd be interested to see what the Glassnode stats are on the amount of Ethereum wallets with 32 ETH in them. I feel like if that number is rising, that's bullish. The amount of wallets with 1 Bitcoin in them is at all-time high, which is very bullish. There's a lot of good fundamental stats out there.
Yeah. No, Ether addresses holding 32 Ether is definitely at a very strong slope, increasing slope. That's for sure.
Should we pull that up or should we just wrap this show up?
I wouldn't know where to pull it up.
All right, we're gonna have to come in with more slides for the next show, but I think this was a pretty fun rip.
Cool, nice, short and concise. I'm gonna go to the dentist for the first time in like 4 years.
Good luck.
That's what I'm about to go do.
Cavities
My
suck.
healthcare is running out at Realty, so I figured like, well, if I'm ever gonna do it, I might as well do it now. Tomorrow's my last day at Realty. So that's fun.
Congratulations.
Yeah.
All right, y'all. I'm gonna edit this one real quick. But you can catch the show at
Send it.
POV Crypto Pod. Let's send POV Crypto to the moon. Nowhere else are you going to get this kind of analysis from me and Mr. David Hoffman. And yeah, follow me at CK_Snarks. You can find me at Bitcoin Magazine.
You can find me at Trustless State, both on Twitter and on Bankless. Thanks everyone for listening.